Welcome to FX Options University, recorded live at the International Securities Exchange, the world's largest equity options exchange. Join the industry's top trading professionals as they provide insight and strategies for trading in the currency markets using FX options. FX options are a low-risk alternative to hedging currency moves in any market condition.
So let me read through your questions. I had a question about timing and leverage. I think this is back to TJ's question, but so if you trade short-dated options, you're really trading more leverage. So for those of you that are in the spot market and love leverage, you might want to trade these out-of-the-money options. But the out-of-the-money options, they're a bit different than trading tremendous leverage in the spot because you can just load up on leverage. You're getting really the spot value. Of course, if you're just wrong by a little bit, you're probably going to get stopped out. Well, in the options market, leverage means magnitude. You need a big move, dollar to rally, dollar to sell off, what have you. And if it does, you could make a very, 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 very nice trade. But if it's a more moderate trade, let's say the dollar rallies just a little bit, dollar sells off a little bit, the out-of-the-money option is not going to really help you. So you might want to think in terms of the in-the-money or maybe even the at-the-money option. So again, that's just back to your point, TJ, at the beginning of the presentation. And there was another question about are options available in many asset classes? And yes, the answer is options are out there in many classes. We know that we have them for equities, equity index, ETFs, currencies, even certain interest rate products. When I say ETFs, there's a lot of ETFs out there. So, I mean, there's something out there for everyone. But we're just talking about currency options. And again, when you're trading currencies, you could trade them in a lot of different ways. Spot, futures, options, and ETFs, I guess there are ways to trade them there also. Let me give everyone another minute for any other questions. You know, I want to remind everyone that we have Trading Central coming back on February 4th, 10 o'clock a.m., and they'll be breaking down the charts. And the next webinar, guest webinar, will be Jason Ayers. Jason will be with the ISC with me on February 9th, and he'll be talking about adapting your option strategies to the volatility of the market. And on February 11th, I'll be back talking back to basics, FX options pricing. Again, that's very, very, I find it very interesting, and I hope all of you do, so you'll be able to get a better feel of your expectations. You buy an option, what might go right, what might go wrong. You're selling an option, what could go right, what could go wrong, how you could hedge it, lots of different ways. All right, I'm going to give everybody just a couple more minutes. I don't see a lot of questions, so either I hope everyone enjoyed the presentation. Not, as I said, not seeing a lot of questions. Oops, good, we're getting, thanks, Jen. You know, we try at the ISC to offer a lot of education. So we broke it up into technicals, which is, again, Trading Central. So they're making actual calls. In fact, they made a call that against the pound, that the dollar would rally. They made that yesterday. We bring in a special guest. A special guest can talk about anything from option strategy to technical analysis to fundamental analysis. And then I stick to, so whenever you see my name, you know you're going to get more options expertise. I spent over 20 years on the floors of 3 different option exchanges for trading options. And so I love to share my expertise, and I hope that helps when you're trading these currency options. If there aren't any questions, again, I guess I'll go back through. I'm going to give everybody another 30 seconds or so. schedule looks like this. Trading Central on February 4th, talking about breaking down the charts, how they make these recommendations. They make market calls. When I say market calls, they make option recommendations by using technical analysis. And they're going to go through this. Thursday at 10 o'clock Eastern, 7 o'clock, that's a.m., 7 o'clock Pacific. Jason Ayers will be back with us. Jason is often with us here at the ISC. He does the weekly outlook, so I'd urge you to sign up for that, where he goes through the chart points each and every week. It's great. I listen to it very, very often, and he'll be giving a webinar, Adapting Your Option Strategies to the Volatility of the Market. And the next presentation after that will be February 11th, where I'll be back talking about back to basics, FX options pricing. All right, I want to thank all of you for attending today. I hope you learned a little bit more about how option orders do really affect options prices. Again, it's when you see demand or supply change, well then the way that we measure that, the implied volatility either increases or decreases. And if you can understand that, well, that's another leg up when you're trading options. So hope you got all that. Please, you can go back to fxoptions.com, listen to the archive tomorrow, sign up for future webinars, where we at the IAC, we're all about education, free education. We think that education is very, very, very important. So we're always giving these webinars. They're always free. Mark, thank you for the kind comments. Appreciate it. Thanks again, everyone. On behalf of the International Securities Exchange, this is Steve Meizinger, your host, and today I'm the presenter, saying have a great trading day tomorrow. Bye now.
Thank you for participating in this week's session. Please join us again next week. Get trading ideas, exchange rates, webinars, news, and commentary. Visit www.fxoptions.com. ISE FX options can be easily traded through all options-enabled brokerage accounts. These exchange-listed securities are cash-settled in U.S. dollars and have a European-style exercise.